You've probably heard about blue chip stocks and maybe even talked about them with mates, but what are they really? It's a good question because there's no one right answer. The term blue chip is generally used to describe large, well-established companies with good financial records. These companies have usually been around for a while and often pay dividends, which is a good indication of a strong and dependable stock, like the Commonwealth Bank of Australia or Berkshire Hathaway or BHP. So fancy. Many investors see blue chip stocks as part of a long-term investment plan. Usually with these kinds of shares, it's slow and steady wins the race. Because they're so well established, people see them as a safer bet than smaller or newer businesses. And then there's the profits from dividends, which is another big plus for investors. If you had enough blue chip stocks in your portfolio, you could essentially live off the dividends without ever having to sell any stock. The tricky thing is, there's no definitive list of companies which are blue chip and which companies are not. And a business we consider blue chip in Australia might not make the cut in, say, the US or somewhere else. So the definition of a blue chip stock is really relative to the market you're in. And in Australia, the closest thing we have to an official list of blue chip stocks is the S&P ASX 50 index, which is a list of the country's biggest 50 listed companies. But then in Australia, we have another problem. About a quarter of our biggest listed companies are in the oil and mining sectors. These are massive and well-established businesses that pay dividends, but then mining stocks can be pretty risky and volatile, which is kind of the opposite of what a blue chip stock is supposed to be. In fact, in today's market, lots of blue chip shares are going against the traditional definition of a nice, dependable investment. Market indices used to be dominated by huge financial institutions, but now we see growth stocks like Afterpay shooting up the ladder, despite its young and volatile nature. And in the US, tech stocks like Facebook, Amazon, and Netflix are all firm holders of blue chip status, even though some of them haven't been around for very long. So with the old stereotypes becoming less relevant, how should you start investing in blue chip stocks? And is it time to throw out the old rulebook? First, plan out what you want to achieve with your share portfolio, and in what time frame. Research businesses in the top 50 or even 100 on the ASX. Large or mid-cap companies can offer more secure investments with lower risks. Check their annual reports and dividend history to give you a feel for their performance. Finally, always consider your options. Even blue chip investments aren't guaranteed, and you might want to think about including cheaper or shorter term investments in your portfolio like small caps or penny stocks, although these are quite risky. For more on blue chip shares and how to invest, click the link below to read the full article. And remember to subscribe to the Find a Money channel for more beginner's guides to investing.